Hey everyone, WJ here. Welcome back to my channel. Today we're diving deep into a topic that's absolutely crucial for anyone looking to crush their real estate exam: real estate taxes. Trust me, I know how boring taxes can seem, but understanding them is essential not just for the exam, but for your future in real estate. We're talking about your potential earnings here, people, so whether you're just starting out or you're a seasoned pro looking for a refresher, this video is for you. Welcome to our comprehensive guide on real estate taxes, a crucial topic for your real estate exam. We'll break down the key types of taxes and tax-related concepts you need to know to ace that exam and get you one step closer to your dream career in real estate. We'll cover everything from the basics of property taxes to the ins and outs of capital gains and everything in between. Now, I know what you're thinking. Taxes? Ooh, boring. But trust me on this, guys. Understanding real estate taxes can be the difference between making a smart investment and, well, let's just say not so smart. So buckle up, grab a pen and paper, and let's get started. First up, let's talk about property taxes. These are the taxes you pay simply for owning a property, and they're usually collected by your local government. The amount you pay is determined by two things: the assessed value of your property and something called the mill rate. Now, the assessed value is basically what the government thinks your property is worth, and the mill rate is just a fancy way of expressing the tax rate. To make this crystal clear, let's look at an example. Let's say you've got your eye on this amazing house. It's got everything you've ever wanted. And it's assessed at $200,000. The local tax rate is 20 mils, which might sound confusing, but it's really not. All it means is that you'll pay $20 for every $1,000 of your property's assessed value. So, in this case, your annual property tax would be $4,000. That's 200,000 divided by 1,000, which is 200, multiplied by 20. Now let's dive deeper into real property tax, or RPT. This is a significant chunk of what we discussed earlier: property taxes. Local governments like your city or county use RPT to fund essential services like schools, parks, and even those firefighters who rush into burning buildings. Think of it this way: your RPT contribution helps keep your community running smoothly. The calculation for RPT is pretty straightforward. It's your property's assessed value multiplied by the tax rate set by your local government. Remember that mill rate we talked about? That comes into play here. And just like before, this rate can vary depending on where you live. So if you're thinking of investing in a property, understanding the local RPT rate is crucial. It's all about making smart financial decisions, right? Now let's talk about how you can potentially lower your property tax bill, because who doesn't love saving money? That's where exemptions and deductions come in. These are like little gifts from the government that can reduce your taxable value and therefore your overall tax burden. One common exemption is the homestead exemption, which is specifically for homeowners who use their property as their primary residence. Then there's the senior citizen exemption, which, you guessed it, is for our awesome senior citizens. These exemptions can significantly reduce your property taxes, so it's definitely worth checking if you qualify. Remember, every dollar saved is a dollar earned. Chapter 4. Capital gains tax. Selling for profit. All right, let's say you've held on to that investment property for a while and now you're ready to cash in. That's where capital gains tax comes in. It's basically a tax on the profit you make from selling an asset, like real estate. Now, the good news is there's something called the exclusion of gain on primary residence. This means if you've lived in your home for at least 2 of the past 5 years, you can exclude a significant portion of your profits from capital gains tax when you sell it. But here's the catch: capital gains tax can be short-term or long-term, depending on how long you've owned the property. Short-term gains for properties you've owned for less than a year are taxed at your ordinary income tax rate. Long-term gains for properties you've owned for more than a year are taxed at a lower rate. So the longer you hold on to that property, the more you potentially save on taxes. Chapter 5. Sales tax. Don't forget the extras. Now let's talk about a tax that often gets overlooked: sales tax. In some states, when you buy or sell real estate, you might have to pay sales tax on top of everything else. This isn't as common as property taxes, but it's something to be aware of, especially if you're buying or selling in a state that's known for having a sales tax on real estate transactions. Remember, every state has its own rules and regulations when it comes to taxes, and sales tax is no exception. So, do your homework, consult with a tax professional if needed, and make sure you're not caught off guard by any unexpected tax bills. It's always better to be safe than sorry. Chapter 6, Transfer Taxes, passing the torch. Next up we have transfer taxes. These are taxes that are usually paid when the ownership of a property is transferred from one person to another. Think of it like a passing of the torch tax. It's basically the government's way of getting a cut when property changes hands. Transfer taxes are typically calculated as a percentage of the sale price or the property's assessed value, depending on where you live. The rates and regulations vary from state to state and even from county to county, so it's crucial to do your research and understand the specific transfer tax laws in your area. Now, for all you go-getters out there who are thinking of becoming self-employed real estate agents, this one's for you. As an independent contractor, you're responsible for paying your own taxes, including something called self-employment tax, which covers Social Security and Medicare. On top of that, you'll also need to pay FICA taxes, which are also for Social Security and Medicare, but are usually split between an employer and employee. But since you're your own boss, you're responsible for both halves. It's essential to factor these taxes into your budget and financial planning because they can take a significant chunk out of your earnings. Let's talk about special assessments. These are taxes that are sometimes levied on properties to fund specific local improvements. Think of things like road repairs, sewer upgrades, or even the installation of new sidewalks. These improvements can benefit your property value in the long run, but they also come with a price tag. For example, let's say your city decides to revamp your street with new sidewalks, landscaping, and streetlights. This is fantastic news, right? Your neighborhood looks amazing. But to pay for this project, the city might impose a special assessment on all the properties that directly benefit from the improvements. So while you're enjoying those beautiful new sidewalks, you'll also be paying for them over a set period of time. Now, let's talk about what happens when property taxes go unpaid, and trust me, you don't want to be in this situation. Unpaid property taxes can lead to some serious consequences, including something called a tax lien being placed on your property. This basically gives the government a legal claim to your property until the debt is settled. If you still haven't paid your taxes, despite the tax lien, the government might take things a step further and sell your property in a tax sale to recover the delinquent taxes. And in some cases, it can even lead to foreclosure, which means you could lose your home. So bottom line, pay your property taxes on time. And there you have it, a comprehensive guide to real estate taxes. Remember these key terms: ad valorem taxes, mill rate, assessment, tax lien, and capital gains. These are crucial concepts that will definitely pop up on your real estate exam. Now, I know we covered a lot of ground today, but trust me, this is just the tip of the iceberg when it comes to the world of real estate. But hey, you've already taken the first step by watching this video, and that's awesome. Keep learning, keep grinding, and keep that momentum going. Good luck on your real estate exam, and stay tuned for more helpful tips. Don't forget to like this video, subscribe to my channel, and hit that notification bell so you don't miss out on any future real estate advice. Until next time, take care.